journey of 1,000 miles, right, begins with a single step. Study the space you want to change your path to, and you got to take the first step, but it's going to be theory. Until you do it, you have to get to the point where you can spot a good deal, and that takes a while. So really, it's that for just taking the risk.
Welcome, everyone, to the Road Less Traveled Show. This is a show about people that were successful in a previous career and left that career to go down a different path. I'm your co-host, Richard Coyne.
And I'm your co-host, Bill Zahller.
On today's show, we're so thankful to have Mike Gilman on today. Mike, thanks for joining.
Thank you for having me.
Absolutely, Mike. Well, thanks for being on the Road Less Traveled Show. To get started with, can you tell our listeners a little bit about your background and how long you were in that line of work?
Sure. I started my career, was it 2009, 2010, started as an attorney. Directly in-house on Wall Street. It was kind of a conscious choice. I was always investment minded, always kind of wanted to invest and grow my wealth that way. Quickly realizing that most other forms of endeavors where you're essentially trading your time for money, and so wanted to get out of that and with an eye towards income from investments. So. I was, growing up, I was an only child. My parents were kind of closed-minded and pushed me to either be an attorney or a doctor. And, I guess I listened. So I became an attorney. But again, I'd say it was always very entrepreneurial and business-minded. So, yeah, started my career there. And that's when I decided to start investing in real estate.
Excellent. So you could be anything you wanted to be as long as a doctor and attorney.
Yes,
Stay in school, get good grades.
At least said they'd support me, to the extent I went those paths.
That's great. No, like you said, there's so many stories that started that way. Obviously, from we're trying to rich dad, poor dad, and all that kind of mantra and corporate think, or I guess just traditional thinking on those. So then you said you shifted into real estate. Can you tell us a little about how that transitioned and how that came about?
Yeah, absolutely. So, this was on the back of the financial crisis, and kind of my observation being on Wall Street and just generally even trading for myself on the side was it all seemed like it was built on pixie dust, at least equities, and by and large the security markets. There's so much leverage in the system, the forward multiples. Just kind of no rhyme or reason to things, and it all just seemed very, very precarious. Like it could all come undone very quickly. Certainly, we saw that, and this view, I'd say, I really got this view from our own experience. My parents had invested a lot in during the tech bubble, and were hammered pretty hard. And again, we were kind of a middle class household, so I remember that. That hurt significantly. And so, with that memory, just never wanting to be in that position where you could have this nest egg just completely evaporate when you need it. And so, looking around, it was clear to me that one of the safest investments was cash flowing real estate, right? So the cash flowing, let's just say, I started buying in tertiary markets at a 10 cap. So I was in New York and kind of looking around. My search took me to Vermont, New Hampshire, where I found very minimal competition, very high cap rates, and plenty of value add any way you sliced it, whether it was through increasing rents or reducing expenses. It was all there. So, we're talking about deals that are north of a 10 cap that, your carry cost at the time was say 4.5%, right? So you're already getting like a 5.5 spread on your investment, and there's plenty of value add. So, looking around, these seemed like kind of no-brainer deals. I didn't care. It didn't matter if they never went up. It didn't matter if they went down. They were just cash cows. And so it just felt very safe. And, the strategy that I embarked upon was to just assemble a cash flowing portfolio for myself to eventually replace my W-2, my attorney income. Kind of take it from there. So, it took a while. I just slowly, at the time, I was just slowly cobbling it together with my own capital. Definitely used some creative financing strategies, but by and large, was doing it all myself. Even managing and on the construction aspect, we started immediately just in-house. By and large, that was a factor of being in a tertiary market. Not many good companies out there, but I'll kind of stop there. And I know I said a lot.
Yeah, no. So you end up, you did all that self-managed from New York remotely. You were able to manage each of the units, including the renovation and the day-to-day leasing and all the other issues that way, or did you have third party you outsourced, like for the management side of it?
Yeah, so we took it in-house, and doing it remotely, but obviously you have someone you trust on the ground there. And we went through a few people and ended up finding someone that has ended up growing with us and is with us to this day as now our head of property management and construction in New England.
Oh, great.
That's awesome. Yeah, it's impressive to build up a substantive portfolio, managing it all remotely. And it's awesome that you found the right person that want to be a trusted advisor, ally, and a person working with you, and they're still with you today. So that's great. Very nice.
And I'd say a big thing there was we weren't partners. He was it was a contract relationship, but we grew together. He made plenty of money as he made money for us. He in turn made plenty of money. So it was a very harmonious relationship without us being partners at the time.
Okay, nice. All right, Mike. So in your previous career as an attorney, there are a million lawyer jokes out there. So is there anything funny that happened to you along the way that you can share?
Just like from in terms of like a legal thing, or
just anything that you said, this is ridiculous. Why am I doing this? I need to go do something for myself. I need to go back to my entrepreneurial streak or aspect.
Yeah, well, almost the opposite happened at one point where we were up to let's say 40 units. And it was becoming huge. There was one building we bought that was just a huge headache. Everything kept breaking. It was cursed. I don't know what else to say other than it was cursed. Like, you'd have stuff like a storm would come by and the roof hatch blew away, or every stupid little thing would happen to that building. And it's funny because it was supposed to be, you'd never know, but it should have been like a low hassle building, and there was no amount of due diligence that would have unearthed it really. But so at that point, we were self-managing, and I was like, well, what am I doing? This was a 10 unit. It was, our cash flow from that, it was such a headache, and it was like cash flow, maybe a net income after all expenses, maybe like $1,000 a month. I was like, what am I doing here? Is this really the path forward? Building up these little properties in some tertiary market. Like I'm sitting here on Wall Street, people are doing $100 million trades and deals, and I started to kind of second guess myself, and so I stopped buying real estate for a little bit. And then COVID hit, and rates went down. And I just knew there'd be dislocation, and it was a time to start buying. So I kind of redoubled and decided that, that my mistake was actually doing it too slow and not scaling fast enough, and just trying to do it all with my own capital. So that's when I kind of redoubled efforts and started going larger.
Yes.
But I know you're looking for something funny. So I guess I'd say the funny thing was that building, so it had on the ground floor, it had a commercial store, and I had all these kind of altruistic motive, thoughts and ideas. We ended up partnering with a local farmer who turned into like an organic cafe and market, and it was such a great idea. But guess what? His business wasn't making money, so that went out of business. So it was like, I guess, just a series of misfortunes, which I guess could be funny.
Well,
for someone else, yeah.
The movie, the Money Pit. Yeah,
that's right.
You bought the Money Pit, so yeah.
But we still made money on it. It's just not what we were expecting, but really the big thing is the time suck. Like, if I would have put in my hours, then certainly we were losing money on it.
Yeah. Well, Mike, as you look back to the kind of the transition, what was a deciding factor for you from leaving the corporate or the attorney world, going into more of the entrepreneurial? You mentioned before, like growing up, some of the, you've been through the .com bust and then the financial reset. Some of the things were on the radar, but was there a specific point that you go, I have to do something different, and decided to the real estate?
Yeah. So at this time now, when COVID hit, I left Wall Street. I was at a venture capital backed company and real estate company, and very much switching my trajectory into the real estate side. At the time, I had a really unique position. I was the head of legal as well as the head of portfolio management, which is a rare dual position, but it was possible. So it was a startup. But anyway, so it was in the venture cap space, and just being on a few road shows and seeing the capital raise process, and quite frankly, seeing how easy it was when you're putting up projections of some with no operating history, and people are just pouring money into it. But there's it's just so speculative. I went back, I looked at my track record with my little New England deals, and it is a no-brainer. I should be able to raise capital, for real estate pretty easily, because I haven't had a single loss and had nothing but great success with my own little investing. And so that at that point, that's when I started pooling capital. But the other big change we made there was expanded markets. I knew I had to go into much more of a major market. In the market I was in, where the market, it was hard to get anything of size where you could. And so that took me to Colorado, and we kind of get into various reasons why I focused there. But we started investing in larger buildings there. Our first pool capital deal was about a $2.5 million raise, a 54 unit. And we're actually just listed it, going full cycle on it, ahead of schedule.
Nice.
Yeah.
Very cool. Very cool. So Mike, as you were really, and maybe it's, so your initial path for all your real estate stuff, you said, was with your own capital. So that obviously at some point you ran out of capital, and obviously, as you said, you attended that conference that kind of got your mind going, wow, I should maybe look at raising capital with other people. As you made that shift, were there some obstacles that you encountered along the way? Yeah, something you had to overcome?
Yeah, for sure. I mean, first of all, capital raising, it's it's more of a sales hat, right? I'm an attorney. I'm analytical. I'm not a sales guy. And so, and I'm not a big people person. I don't like to network. And so I don't put myself out there. So it was tough because I didn't like to sell people. And nor did I have a big investing network. Yeah, sure, I was on Wall Street, but these are people that are investing in high caliber deals with sponsors that have billions under management. So my network there wasn't an ideal fit, and so it was tough for sure. In the beginning, my whole thing was, look, I have a good deal, and I should be able to do minimal work here. I got a little track record. I got a good deal, and the capital should flow. But it doesn't work that way in the beginning. Certainly not in the beginning.
Yeah.
So for sure, it was tough. And I'd say that first capital raise was probably the hardest thing I've done in my life.
Yeah. Okay. Yep, we hear that a lot. I mean, that people, and you think you have a good network and a good plan, everything, and people a lot of times do have a very good plan, but it's that initial thing that the people you knew saw you as an attorney in Wall Street, and then now you're doing something different, raising for that, and it's it's always a little different between, I think, people's expectations on deal one and what actually transpires once you take it out to the public. But that, like I said, you have to get there, right? You learn probably a lot from that first raise. And then it got you a track record and got people used to seeing you bringing things out, and it's all part of the process. But yeah, it's definitely a difficult thing to raise equity, I think, starting out, for sure.
Yeah. And, I kind of just, my style is, I just charge right in. I didn't start small with, say, a 20 unit deal, $1 million, like I've been doing. I went to a new market, raise was 2.5 million, and I'd raised, nothing to date. So it was a huge, I'd set a huge mountain to climb. And, I'd say what I knew as I was climbing it was that if I could get there, that this would be a viable, flourishing business. But I have to tell you, there were times where I wasn't. And again, this was during COVID, right? And we closed in January of 2021. But that, quarter there just was, a mess. Everything was so dislocated.
Right. So would you say, Mike, was that your kind of your first victory, like you said, once you achieved that raise during COVID for a new asset, that you kind of cemented the idea that this is a viable path? I can do this full time.
Yeah. I mean, after that one, it was, everything just became easier. We needed to execute on it, at least show some progress. But the deal that came after that, it was easier to raise capital.
Mm-hmm.
I did a smaller deal just from that experience, and then the deal after that, it was even easier. And to the point now where we're typically oversubscribed, and getting just JV equity, which we get into like different capital types, but it's kind of the full stack.
Yeah, great. Yeah,
nice. So, Mike, in your new world and your larger apartment deals, et cetera, is there a funny story that has happened to you since? Anything you can share?
Yeah. Actually, here's a really good one. We were, I think it was funny. This was on a deal we just closed. I was out doing due diligence with our JV equity investor, and we were touring the units. And they came with like a crew of like 3 or 4 people, the principal, and then a bunch of analysts and an intern. So everyone's following me around, and I entered this apartment, got my camera rolling, narrating like, we're going to do this, we're going to do that. And then I don't see this big glass table, and I trip over it, crash right through it. The glass goes flying. It was like a total blooper, but and I got all the video, and so it was with our JV equity. Thankfully, they ended up investing.
I felt sorry for you.
And I did get. I was pretty bruised up too.
Yikes! Actually, sorry, Bill. Real quick. Actually, that happened to my grandfather years and years ago. He used to have a bird feeder out back, and whenever the squirrels would go attack the bird feeder, he would get so freaked out and pissed off that he would run out there and chase squirrels away, which is silly. But anyway, one day he didn't realize that the screen glass door was closed, and he ran right through it. It was not pretty. He got like 100 stitches out of that. So, yikes! Wow.
Well, excellent. Well, Mike, where are you today on your journey? You said you've done several raises now, and you're concentrating on the equity raise, the multifamily side of it. So where are you today, and where are you looking to go down the road?
Yeah, we're really right now focused on the Colorado Front Range, where we've got off-market searches going with our off-market acquisition partner offered, and then great broker relationships there, and really focused on scaling out there. All the way from Fort Collins south to Pueblo, and really building out our infrastructure. I partnered there with a property management and construction company that since then we have exclusivity with, and essentially coming in there as a partner and at a higher level, and essentially expanding that operation and kind of just growing the full capabilities across the Front Range. And so that's where we're focused right now. Is again, it's a very properties in my mind a very location based game. You really need the physical presence. So we're just scaling and trying to build on our current success and momentum in this region.
And what's your typical profile on that? Are you looking at C's or A-, value add, core plus? What?
Sure. So our typical deal, I'd say, is between 10 and $50 million, with significant value add. I mean, that's what we look for first and foremost. Typically, it'll be a Class C or a B minus, and we look to bring it up a full notch, so like a C to a B. We look for older vintage where you can gut renovate, and where there's also bad management, so you get that renovation bump, and then you also get bump from operational efficiencies. So when we find those two components, it's usually a slam dunk, of course, provided we get them at the right price. What's interesting, I'd say, was up until, say, 6 months ago, the listed market, you could not get a good deal. And so the only way we managed to get deals out there was laborious off-market campaigns and searches. But I'd say since 6 months ago, the listed markets have blown wide open, paucity of buyers, and you could really hammer yourself out a good deal. So, we're seeing a lot of opportunity, right? When others are fearful, how it goes. So we're just seeing, and I think there'll be even more opportunity next quarter, before they start lowering rates again. But there should be really soft prices. We'll see if it reaches distress levels, but it's certainly some nice softening where we can come in.
Right. Absolutely. Yeah.
Good. So, Mike, is there something that you do, or maybe you do through your firm, that you do to give back in some way, perhaps to help others in some way?
Yeah, absolutely. We donate some of our profits to environmental causes, Wild Bird Society. Also, my parents are from Ukraine, and I'm first generation, and kind of what's going on there is it's really tragic. And we try to give back through we've got a engagement with an IT firm that's out of Ukraine that's working to enhance our asset management, build out an asset management dashboard, and kind of take us to a higher level than what kind of the out of the box systems come with. We're trying to build in kind of advanced, like, machine learning and spot patterns and so on and so forth. And so donating our profits there.
Excellent. That's great.
Okay. Well, Mike, as you've continued to expand and scale your business, is there something you've recently implemented that's allowed you to achieve that at a faster rate?
Yeah, offloading responsibility to the right person. Just one thing that's been a challenge as I'm scaling is not having to be involved in kind of every aspect, again, because we're vertically integrated. So, right, we have the capital side all the way down to just routine property management issues, because I own a property management company in New England and a construction company, and then we've partnered with one in Colorado, which I'm scaling. So it's just this full gamut of kind of issues where it really just needs to be delegated to the right area. There needs to be process, and things kind of need to run more autonomously without me having to preside over everything. So that's a work in progress, certainly. But
yeah. And that's always the balancing act when you're starting, right? As an entrepreneur, you're in all the details in the beginning to make sure you learn how everything works. But then at some point, like you said, you have to kind of step back and delegate so you can use your time most efficiently, I guess, as you're pursuing deals and the equity and running projects versus, emailings, marketing, all the things that can be done at a different level. It's kind of that balancing act because, as an entrepreneur, we want to be in control. We want to know what's happening on all aspects of your business, but you want to work, on your business, not in your business, be bogged down in the day-to-day grind of it.
Yeah, for sure.
Yeah. So, Mike, what advice would you give somebody who's considering making a path change?
I'd say one is, study the space you want to change your path to. And then let's just say it's real estate, right? So that's common. Those people. and you got to take the first step. So, you got to study it. You have to, get to the point where you can spot a good deal, and that takes a while. And certainly that you don't really get good at it. You could study that all you want, but it's going to be theory until you do it. So really it's that for just taking the risk and putting a journey of 1,000 miles, right, begins with a single step.
Yeah.
And,
yeah, absolutely. I mean, certainly that can be said about so many things. I mean, for example, just take the idea of language. You're not going to become an expert in speaking a foreign language just with your high school Spanish, right? So, and the way to really, truly learn it is to immerse yourself in it. And that means taking action. That might very well be going to live somewhere, if you really want to become fluent. But yeah, makes sense.
And I say the other thing is, whatever it is you want to be doing, you have to make presumably that's what you're passionate about, because when you can align your passion with your work, that's when you can get truly exponential, that's where you can get results that, other people can't get, because that combination, it gives you the motivation you need to not give up, to keep plugging away. And, no matter how hard it is, as long as it's a passion, it's enjoyable. And that's how you get there.
Yeah. Absolutely. Yeah. I'd much rather, you have long days, on property tours or, events when you're spending 14, 16 hours a day in your business. To me, that's still much more enjoyable spending 14 hour a day working on something I really enjoy versus 8 hours and something you don't. It's not even close. At the end of the day, I still feel much better about the time I put in there, building out your systems, building out your company. And it's more rewarding, fulfilling work to me anyhow than just, putting in the minimum time and to get by. I think how we all got to the point we're at now versus the W-2 side of it.
Yeah.
Well, Mike, what's the best way for our listeners to reach out and learn more about what you and your company are doing and along the Front Range there? Yeah,
so I'd say social media wise, I'm most active on LinkedIn. So Mike Gilman, find me there. Our website, crossmountaincapital.com, great resource. You could sign up to our list, get updates. Or shoot me an email, Mike at crossmountaincapital.com.
Excellent. And we'll include links in the show notes to all those resources for the listeners. Well, Mike, we really want to thank you for being on the Road Less Traveled show today and appreciate your time and enjoy the conversation and wish you continued success.
Yeah, guys, thanks for having me on.
Absolutely.
We'd like to thank you, Mike, again. And we also like to thank our listeners. Please continue to give us a 5-star rating so we can bring you more great content like today's show with Mike Gilman. And thanks again, Mike. We'd also like to thank Park Capital Partners. Park Capital Partners sponsors this show. We also have 2 things we want to remind everybody about. We have the Park Capital Partners Value Add Fund, which is a 506c fund that is open today for accredited investors. And we also have the Park Capital Partners Foundation, that is a 501c nonprofit. And the way that works real quick is that first, Bill and I fund the operation of the foundation. So all the money donated goes to do its best work. Second, we donate personally, we donate corporately. Thirdly, and then finally, when investors invest with us, we make a donation to honor them from a pre-selected list of 15 different charities so that the investors can feel good about not only investing to make money, but also doing some good for the society. So anyway, thanks for joining us. And remember, folks, please remember that the road less traveled may be calling you. We recommend that you listen and take action. Thanks for joining.